What's going on, high value investors? If we want to invest like an alpha, we gotta buy stocks when they are down. Today I got a great real estate company that now has a starting dividend yield of 8%. This is a great way to build wealth over the years, and that's to have companies like Medical Properties Trust in our portfolios. Now, MPW, they invest in hospitals such as acute care, rehabilitation centers, long-term acute care, and other areas that require patients to see an actual doctor. The company operates in the construction of new or renovating hospitals, as well as expanding already existing ones. MPW currently owns 447 different properties in 10 different countries. That's over 46,000 licensed beds, with a portfolio worth an estimated $22 billion. Now, we know REITs, they typically have high dividends, but 8%, come on, there has to be some sort of catch. Well, there sorta is. You see, MPW, it's down 30% in the past year. The primary reason for this is concerns about one of MPW's major tenants, Steward, having trouble paying its bills. MPW typically collects about 5 to 7% of a hospital's overall monthly revenues in the form of rents. In their latest earnings call, management only had good things to say about Steward, including that their volumes were up double digits since last year. Some of their locations were hurt hard during C-19 as elective surgeries were put on hold. They also state the 41 hospitals that are leased to Steward could easily be replaced by another tenant, as the locations are in such attractive places. That's the thing about real estate, guys, is that there's always gonna be a demand for it. MPW spent a considerable amount of time giving updates about everything Steward related during their last earnings call, whether that was how they were doing positively in the short term or their long-term outlook for Steward, such as their strategic and operational initiatives to make the company more profitable. That sounds like good news to me. I mean, if a company had something to hide, they probably wouldn't spend most of their earnings call talking about Steward. Can you imagine how the management's last meeting went? Hey guys, we're seriously in trouble with Steward Capital, and they're gonna grill us in the earnings call tomorrow. What should we do?
Okay, hear me out. How about instead about talking about our company during the earnings call, we just talk nonstop about Steward? They won't suspect a thing.
MPW actually does sales and leasebacks, meaning they can own a portion of some of their own tenants. REIT law allows for 25% of their assets to be non-real estate related, as well as 25% of their overall income. Another reason MPW stock and REITs in general might not be doing so hot is rising interest rates. This one is at least more transparent. As companies like MPW want to expand, they will need to borrow money, which is now more expensive. Medical Properties Trust plans to do $1 to $3 billion in acquisitions in 2022. Now, we know why the stock has been falling, but let me tell you why I think getting in at these prices is absolute highway robbery. Inside MPW's lease contracts is rent escalation rates, which means investors get some inflation protection. Medical Properties Trust can expect to lock in another $57 million next year from their escalation protection next year alone. MPW also has an amazing track record of rewarding shareholders. Since their IPO in 2005, the company has never missed a dividend payment. It's also raised their dividend for 9 straight years, even if most of those have been penny raises. They also have a really healthy payout ratio. If we took their funds from operations of 46 cents and their dividend per quarter of 29 cents, that's just a 63% payout ratio. Now, if you are still worried about Steward, they actually only make up less than 20% of MPW's portfolio. So luckily, they are well diversified with other high quality tenants. This is also just such a fantastic sector to be part of because everyone needs healthcare. It's always going to be profitable, whether you're young or old. This is why I'm backing up the truck guys with shares of MPW. I already own 100.47 shares, and they send me $116 every year, but they better stretch out that checkbook because I'm going to be buying even more shares and I'm going to make them pay me even more in dividends. An 8% starting yield is absolutely crazy. That's not to say that there's no risk in MPW. as there is with any investment, but I do think the reward is certainly justified. Let me know what you guys think. 8% dividend yield, come on, is it worth it?
Should I let MPW work it?
Remember, my videos are always found in podcast form under the Collect Cash podcast name. Remember to hit that like button, it does go a long way for a small-time YouTuber. Make sure you're subscribed, and I'll catch you on the next one.